YouTube, what's going on? This is TerrenceRe, back at you with another stock market update. Um, Title of this video is the AI Craze Continues. So we're gonna go over some plays in AI, basically tech for the most part. Talk about that and talk about how the day is going. And without further ado, let's get right to it. So right now, currently we got, if you're looking over here on the left, I'm in Thinkorswim currently. Now the VIX mark, you see the VIX is down. So vol is down. And generally when volatility is down, you can use the VIX, which is right now sitting at a 16, down 3%, or the VIX futures, either or. VIX futures is just a tad bit accurate in my opinion, just because um, it's the futures, and I tend to lean to the futures when I'm looking at overall market direction or direction on the day or whatever the time period I'm looking at. And you see, we got the S&P 500 futures are up. The spools are up 36 handles. We got the Nasdaq futures up about 236 handles. So on the day, the Nasdaq is leading the way. Overall, it's up 1.78%. So almost 2 whole percent in the Nasdaq, which is mainly your tech. And when you look at everything else, the S&P 500 is about 1%. The Dow futures is barely, not even 0.5%, but it is up, it's green, and the Russell futures are up 0.5%. So basically, this is a tech field rally. The reason why the S&P 500 is not up as much is because it has banks in it. And as we all know, the banks have been taking, the regional banks anyway, have been taking a beating. But JP Morgan is up, right? Morgan Stanley is up. And if you see, one of the reasons why the Russell isn't as much up as much as the NASDAQ is because the Russell has the small regional banks. So that's just their overall market view, but we want to talk about tech because tech is exploding higher. Um, we got Meta, which is Facebook. I'm still used to calling it Facebook, but the symbol is Meta. It's up. You see, up $4 today. Apple is up. Amazon is up. Google is up. Microsoft is up. Tesla is up. Netflix is up. Nvidia is up. AMD is up. So we got basically the whole tech sector is moving on the day. One of the things we could do to look at, let's take a look at, I'm going to come over here on this platform and I'm going to go to Market Watch, right? So if I come to Market Watch, I'm going to click on Visualize. And then I'm going to come to Indices and we're going to put it on NASDAQ 100, right? Now, this is your heat map of the NASDAQ 100. And you can see it's a lot of green on this heat map for the NASDAQ 100, which is your NASDAQ futures, right? Or your QQQ ETF. Let's go. Now I'm going to change it from heat map and we're going to go to index watch. And then I'm going to go select watch list. Let's see. Let's find it again. Let's go to NASDAQ 100. And as you can see, we're seeing 78 advancing and it's showing 24 declining. It's only supposed to be 100. It's showing 102. I think Google is in here twice. Let's see. So you got Google in here twice, and there may be another one in here that might be in here twice, but you got Google in here twice. So you can see that the majority of them are up. The Netflix beasting on the day. I'm gonna go over Netflix in a minute and give you guys targets. Ain't nobody giving out targets like me. So you can see which ones are moving the most on the day, right? So we do have a couple red. Baidu is down. Um, JD. Now, PDD. I don't know what PDD holding is, but I think JD and Baidu, if I'm not mistaken, are Chinese companies. So I don't know if something is going on with the market in China, but that's that. Let's see what's this. T-Mobile is down. Walgreens is down. It's amazing how Walgreens is in the Nasdaq 100. But you can see Netflix beasting on the day, Synopsys beasting. What is this? Copart. What is that? Cadence. Some of these stocks I never look at. Here's AMD, right? And then you can see, but this is just a quick way, a visual. Like I said, you can do it, look at it here. I like to look at it here throughout the day. So then I can see and pick one of the ones that's moving up and I want to go with the flow, especially if I'm doing some intraday trading, doing like some day trading or something like that. And then sometimes you're just going with the flow on your overall, just, if you're buying stocks. Now let's zoom out and let's take a look at some of these targets that I was talking about. Going back to my charts, on pad, what I wanted to look at, we're gonna look at Netflix. Netflix is killing it today. Um, Now I think some news came out on Netflix. Let's see. Live news, Netflix. What's going on with Netflix stock today? I know you got I don't It's just saying stock shot higher Thursday on reports indicating the company's ad-supported subscription tier has nearly 5 million global monthly active users. According to a report from The Verge, the company disclosed the ad tier subscription metrics during its 2023 upfront presentation. So basically, they got a lot of subscribers. Now, one of the things I just read that just to give you the news of the concept, give you the news of basically telling you why the move happened or why they're justifying this move. But I can see that the move like that something happened by this gap. See this gap right here? Now this is a daily chart. Each candle represents a day. We got a gap right here. For me, automatically when I see gaps, I like to use those gaps as support. So my support be right in here somewhere. And then I have like then I throw my Fibonacci's on. I got my retracement, excuse me, and then my extension. Now, I got a target. I can't remember if I tweeted this out. I think I put this out on the page on my I put this chart out on the community tab. So first of all, you need to hit the like button and subscribe. So when I put these charts out, and you can follow me on Twitter because sometimes I'll post it to Twitter like straight from the phone, and you'll see the chart on there. Sometimes I'll post it straight to the community or both. So you go to my YouTube. If you're on here on the page right now, go ahead and follow, and then give me a follow on Twitter too. I don't really get crazy on Twitter. Every now and then I post some political stuff, just to stay relevant. But most of the time, I'm all stocks and trading and stuff like that. So right here, you see my next level is actually right around 382. It's going to take out the high, or I think it's going to take out the high of 379. And here we are. It got all the way up to 375, and now we're kind of sitting towards the end of the day at 371. And I still think it got room to run. I would probably take profit right when it took this high out, right around 380. But my extension level got it at 382, right? So, and you can see right here, if you're looking at the screen, you see this trend line right here. It broke out of that trend line. So it broke that trend line, made a high, came back, retested, made a low, and then we got a higher high. That's your classic bull flag right there. That's good money. Once you get this high, 2 candles down, it reacted, boom, gapped up. That's your classic. That's your bull flag in real life and in real time. Not this ain't no image on you look at it on Google and somebody got something that this real time bull flag, right? This is super bullish, super bullish. Now the crazy thing about it, I'm getting ready to show you these type of moves and other stocks that are in the Nasdaq considered in the tech that's considered tech. We looked at Netflix. Let me check my scratch pad. What's my next one? Let's go take a look at Tesla. Now Tesla, I've been in and out of Tesla. I have been doing some day trading in Tesla and my Surge Trader account, right? And the link to that is down in the description. So basically, I'm doing a trial period with Surge Trader, and basically where they are fund traders. So you got to make where they give you like 25 grand, you make 10%, 2,500, and then they will give you money, their money to trade with. So I've been trading that account in here, right? And so that's why you see this right here. I'm gonna pull it down and go. We're gonna zoom in. So look at it on the. Let's look at it like this on the hourly, by my time axis. So what I'm doing right now, let's see. Do I want that? But I want to. So the reason why it's not matching up is because the time axis is showing the extended hours or after hours session, and I don't want. We don't want to show that. I just want to show when the market is actually open. Now you see how everything where I made my lines at. So we got this low, got this high, pull back, and look, what did we get? A gap. Now this is intraday. Each one of these candles is an hour. So this was like 9:30 on Wednesday. And then if I come in and I look at this on the daily, this is what it looks like. Got a little gap here. So I'm kind of, like I said, I was day trading this, right? And on the day trade, on the intraday, this is what it looks like. And it already hit my level, right? So I'm going to come over here. I'm going to show y'all how the sausage is made. This is an intraday. This is something I call my chaos setup, right? Intraday, you can see that I was trading early this morning. I got in somewhere right around in here, held to this afternoon. You can see it came, pop right up and hit my level. Boom, right there. So I got out at 176. I think it took me out at 176.07, something like that, because we had this jump up right here. And then that's that. So on the intraday level, that's an intraday. So I'm going to take this off and remove that because this trade is over with. So now let's just zoom out. We're going to go back. This is a 10-day chart, and this is what it looks like. Now you can see that it came up to this level right here and just kind of held. Let's take that off right here. You can see this was like resistance, because it just kind of hung. Each one of these, remember, is an hour, and it just sat here all day. Now towards the end of the day, look what it's doing. It's starting to move. So what's my next level on here? Next level is right around we'll call it 180. It's actually 179.89. I got Tesla running up right around this level. So we'll see what it does tomorrow. We're getting ready to market's getting ready to close up in about 2 minutes. So I would expect Tesla to be somewhere up around here tomorrow. Let's take a look at my. Now on the stochastic, it is overbought on the stochastic, but you can see that it just made another arrow to turn up. So I think it's gonna max this stochastic out. So we could get a pullback at any given moment, I would say, in Tesla, but I'll look for it to take this high out and then come up here somewhere, and that would be a level where I probably would be doing some taking of profits. Let's zoom out and look at the daily on it. So this right here is the 200-day SMA. So you can see it is right around 203. So Tesla could, after it makes this high. Now on the daily, it hasn't quite got overbought yet on the stochastic. So you got room to run. You're looking at this on the daily. Take this high out. Could run up into here. Like I said, 180 though, I expect to see some resistance. Next stock we want to look at. See, I like when you got movement in the market, the energy is here in the market, and you can see it. AMD, let's take a look at AMD. AMD, I bought a call in AMD, right? I bought a call in AMD. I did that I'm actually doing a little bit of I'm getting more aggressive in my 401k. Uh, I got a little bit more money to play with there. So let's get a little aggressive there. Um, I want to retire as soon as I can, but got some more working years in me. So let's get aggressive there. AMD, it has made a move. We on the daily. Now we're about to see what I call a confluence of indication, right? Of indicators. And I'm gonna show you Fibonacci levels on the daily. This right here, I'm gonna take off the intraday. Let's see. Let's take the intraday. Let's take the intraday off. Now this is just daily. So we got from, and we just ended the market. So we got right here this low, this fractal. I came from this fractal level here, um, to here, to the pullback here. Now that was the first level. It blew through that level. Now these are daily candlesticks. AMD blew through this level right here. Now, if I come and show you what it looks like on the intraday, you can see it kind of inched up to it, right? Shot through it. Got a red candle here, pull back and using it as support, and it's taking off again as the market closes, right? Look at the stochastic crossing over right here again on the intraday. Let's go back to the daily. Let's go back to the daily. What's that target? Right there. This was what you would call, this is a classic AB equals CD. What do I mean by that? Right? So in harmonic, when you're dealing with patterns, the measurement from this low to this high, right? So this low is what? What's this low? 8102. This high is, let's see, 8102 and 99.94. Let's call it 18 bucks. Let's just say 81 to 99, 18 bucks. Now that means that this low, which is 93.45, let's just call it 93 plus 18. What does that give us? 103, 111. Am I right? My math right? 111. So that means that this from here to here should equal from here to here. So 111 will put you right here. That is A to B equals C to D. So basically, if we got an $18 move here, we should have an $18 move from here to here. Now this is on the daily. You see where it's right there at our next fib level, right? Now it could go through. I got more levels after that, but we're talking about the next one. Now let's go intraday. I'm gonna come down and drop this down, and we're gonna go hourly. And you can see now you look on the hourly, you guys can see these trend lines being drawn on this platform automatically, that I have set up. And you can see it's trading in a channel intraday wise. Now, let's put this intraday trade on from this low where we get a crossover of the moving averages. We got a high here and then a pullback here. And there's certain levels that I'm looking for on the retracement from here to here. This level does coincide with a 618 retracement. Now, boom, boom, boom. Now let's look at these levels on the intraday, right? You see how it got to the 100, and we got a wick, held there, held, pulled back. Now we got to move again, right? So now let's look at what it did. It got up here to the 1618. Look at it, made a high, came back into here, boom. Now the next level for this intraday wise is right here at the 2618, right? That's right at the same level on the daily of the AB equals CD move. And so what I did was I came out and bought the 110 call option on the option chain. If we come here and then we look right here, so I came 64 days out and bought this 110 right here. Now you may say, well, man, why would you go out 64 days? I probably didn't have to go out 64 days. Probably could have came here 29 or maybe even here at 43. You know, hindsight's 2020. Buying this one right here probably would have been a little bit better. But going out here, Now I'm paying for time. The further you go out and buy on a call option, the lower the theta decay. And I'm getting ready to show it to you. Let's look at, let's take this now. Another thing too, look at all these options over here. It's a lot of 17,000 contracts out here at 110. So I ain't the only person trading around these levels. I'm going to change this delta. I'm going to change it to theta. I want to show you guys. You see how the theta right here says 0.07. Right now, let's go. Let's just go 15 days. You see right here where it says theta 0.12 is more theta decay on these shorter term options, which means that you need to be right faster. Means that, like, okay, you bought this option, it's cheaper. You're only paying $269 for it. You need to get this right within like the next, it's 15 days. That means every day it's decaying, and it's decaying fast. And so I'd rather not have to deal with that and just take my time, right? I'll pay up for it. You're probably going to still make the same amount of money, if not more, on this one further outdated. You got less risk in this one, but really, do you? Because I guarantee you at 15 days, you're at a risk of losing the whole $269. Now you may say, hey man, you paying up out here, you paying like 700. Now I'm not putting that whole 700 at risk, and I'm gonna show you why. Right here, at it being paying right here, I'm just calling it 700, right? Check this out. Let's say um 20 days go by, or better yet, to be exact, 28 days go by. Let's go to 36 days. So what I'm doing, all I'm doing is going from 64 days. I'm closing this option chain up, going to 36, and looking at this same option. Look what it's worth, about $5. So that means that if nothing happened, basically I'm losing about 200 bucks. A better way to illustrate this is I'm gonna open up both of them at the same time. Now, right here, 110 option, you paying about $7. That's $700. Right here, 110, you paying $5, 500. There's a difference of about $200. That's about that's about the estimate of how much decay will come out of this option if we don't get anything done. So I'm really risking about 200 bucks for about 24 days of risk. Excuse me, I'm sorry, 28 days of risk, approximately. So that's how you price the option. So I'm not risking 7. If I'm not, I fully expect AMD to hit that target. Possibly it could hit it the next tomorrow. Today is a Thursday. It could hit it by Friday, easy, or by next week, right? If this market was to come up here and then roll over on me, I know I'm wrong. I just close up the option trade, and I'll probably be down a couple $100. But I'm paying for the time. Unless you're doing day trading. Now, if you're day trading an option, meaning you're going to be in that option and out of that option that same day, okay, excuse me, cool, right? You want to take that shot, you want to buy up in here. Now, if I'm day trading though, I'm going to take this theta and I'm going to put the theory, I'm going to go back to delta. If I was day trading this, I would not have bought far out of the money day trading. Day trading, I'm in the money buying my options. I'm right around 63.76 if I was buying this option today, and I would have bought it when the market first opened and been looking to close it out before the end of the day. But other than that, I like to be, me personally, I like to be further out in time, give myself more time to get out of that curve. Because remember, theta really starts to heat up. That curve really starts to heat up around 23 days. So you buying around here 36 or 29, you got about a week or so before it starts to heat up. Out here, we got time. to not really lose a whole lot of value on our option. All right. I hope that made a little bit of sense out there. I wanted to go over that. I told my homie I would talk about that and give a little context. Let's see. Us next. We're gonna talk about Google. Let's go take a look at Google. Google. Um, let's see. Look at Google, same thing. This is a daily chart. I'm gonna take off the indicators. We're gonna come out here. Let's take this. I should have saved that so it wouldn't do that again, but I didn't. Let's see. Show extended. If you guys want to, put some notes, put some down in the comment section, because I know I'm clicking on stuff fast. If it's stuff you want to see me go over, ask the question in the comment section, and then I may do a separate video for you because I know I'm going fast. All right, so here we go. You can see the breakout. You can see the trend line right here of Google breaking out from right here, right? You see that? It didn't even come back and retest. It just took off. But we did get a bull flag in here, right? And see, here we go. You can see it came right here, tested right here, right at this level, shot through and gapped up, got to the next level right here. It wicked on May 11th, chopped, and then took off again. What's the next level? At that point, we're just looking at what's the next level. Next level for Google is right up here at 127. Y'all hit that like button, hit that subscribe button. Look at it. That's the next target. That target coincides with this right here. This low, high, breakthrough. That is a resistance level. That's resistance right here. I'm going to draw it all the way across and look at our Fibonacci level. I'm willing to bet money Google stall right there. That I'm not saying it's going to stop in the long run, but we'll probably get a hit here, a little chop, maybe even a little pullback to set yourself up to get long again. If someone wants to get long, next level is up here. Now, once you get past 1618, these next levels are at every level, especially on a daily chart. Like intraday, you got a good chance of hitting these levels. Daily charts, this level right here, I'm not saying it won't hit it. Just be cognizant of we got at the end of the month, we got the whole debt ceiling thing, right? Is America, is the United States, are we gonna continue to pay our bills? Will they raise the debt limit, right? So that we have the potential of catastrophe wrecking the market at the end of the month. So that's why these targets, if they vote and they raise the debt limit, this market could go parabolic. But just keep that in mind with your long positions, that the risk that we have geopolitical risk out there. And I don't think it's being priced into the market. I think the market is actually pricing in that they're going to get it done. But I don't know. So look at the bond market. The bond market is trading in a range. Look at that. And it's starting to go down. So that could be signaling, one, that the Fed they're not done raising interest rates. Right. So if they were going to be done raising interest rates, we should see the bond market go up. The bond market should start to go up. Yields should come down. But if they're going to continue to hike, then we're gonna see bonds sell off. We're gonna see yields go higher. The bond market is telling us currently, hey, they may not be done. The Fed may not be done raising rates. So this is a way of being able to look at a chart and be able to kind of gauge what the market is pricing in. So I hit Google, I hit everything. The Micron call. Actually, I'm looking at. Excuse me. I was actually looking at the halftime report. and Josh Brown came on, and it's kind of like one of my favorite guys. Guys, man, and some I like to hear some of the gals too. It's not that, when I say guys, it's just kind of like universal. But one of my favorite people to look at on CNBC, and he actually called this out. Beautiful breakout. Son, I think he's getting a little bit more technical with his stuff. This is beautiful. If you're looking at the screen, you can't draw it up no better than this. Look at this triangle. It's right there, and the market is breaking out. So with it breaking out right here, I would like to see it come up, pull back, and retest, and then give me another high. But who knows? It may not even look back. So if you're looking at Micron, the highs, this is a 3-year high of $98 back here. So it's coming off the lows with a breakout. Man, if so, like I'm not in this trade or anything like this. What you could possibly do, I don't know what the IV rank of this is because I don't have it on this chart. Let me look at let's pull up. Let's pull up. So right now, currently, it got an IV rank of 11, which is not a lot as far as like if you want to trade in here. Let's go to the option chain. I'm going to look at option statistics. So, like I said, it got a current IV percentile of 11, which is low. The regular implied volatility is 40. What's a potential trade, right? I'm not telling anybody to do this, but if I wanted to get long this, I probably come out here and sell a call. Maybe sell a put. Sell a put to get long. Right around 29. This 29 delta right here at the $63. Already got some open interest here. This is probably where I would sell my put. Or you could come in here if you want to collect a little bit more juice, try to collect a little bit more. You probably could sell that 32 delta right here. So I'm at 43 days. I'm in the weekly in this. You want more liquidity now? Might get more bang for your buck at 16. Come out in June, 29 days. That means you got to sell the 65 delta. Excuse me, the 33 delta right here is $65. You can sell that one. Let's see. And that's right here below the gap, right? So here's it gapped up, came down. Let's look at it. See? Let's look at it hourly. You see it gapped up, came down, closed the gap, and then it's gone. So this was today. And then you got a gap right here of it coming up. So this is how I would definitely, like, if I wanted to get long this, you could sell that put, or you could just come in and just buy the shares outright. Say, whatever. Come jump right in, maybe put a stop down here below 60 and let it run and see what happens. Just be careful, be comfortable. I do think it's going up here to fill this gap. Y'all know what I say. I say be comfortable with 100% loss, even though I don't think the stock going to zero, right? So 100% of whatever your trade is. If you put a stop right here below this low and say let's go, you're looking at some support, some resistance right around here at this gap. You got a gap way back here. It's coming to get us a feel on this gap right here. Right there, right around $72. Right? So there you go. And this came courtesy of Mr. Josh Brown on the halftime report. And when he pulled it, I'm sitting there looking at it, right? And then he threw it out there. So I run in my chart and look at it. I said, "Oh, I like this. I'm going to see if we get a pullback. If we get a pullback, I might jump in there and buy a leap option on this. Leap option, come out like maybe a year, maybe 2-year leap option. And then what's a leap, you coming out, as opposed to just buying, getting long the stock, you come out here maybe, I don't know, man, 764 days, maybe let's just say to the end of the year, 246 days, and you could come out here and buy, get right in here at, let's look at the chart and see what we get. So that's 72. What's another level after that? I would say maybe right at, you're gonna get a little chop in here. Let's say 80, right? Let's say 80. So if you think it can make it to 80 by the end of the year, which I definitely think it could, you just got this 38 delta, so the market thinks that it could too. You could buy this one right here at 80, spend about $500 on it, and look to try to double it by the end of the year. So I like that too. That's a different kind of play. Make about $500 on that option or more, depending on how fast it take. So you got an expected move of $20 between now and January, the end of the year. So $20 will put it right at 87. So if you buying that, if you wanted to come out here, maybe 30, 34 delta, you can buy, you got looking at 350, 400 bucks right around in that area. So any of those options right around $80 to $85, buying that call on the leap option, giving yourself time, and then not being subject to too much data decay. But a whole lot could happen between now and then. You got a lot of risk geopolitically that could happen between now and then. But I do like this breakout. This is a serious breakout right here. It's breaking out of a crazy range. Like this range dating all the way back to August of last summer, that kind of chop. So, hey guys, with that, I hope you got something out of this video. I ran a little long, but that's just because, the market got a lot of nice setups in the market right now. We got volatility going lower, which is a bullish sign. We got bullish charts. The technicals look good. Even though they telling us the sky is falling in the world, the chart is telling us something different, at least in the tech sector. Banks look crappy. Um, everything else. So it's almost like, because like if you look at the Dow isn't, the Dow is like in a range, right? So it's kind of like trading in a range, and it looked like it may break out. But if you're looking at the Dow, then if we were to come look at the IWM, which is the Russell, the small cap, you can see, and that's because it got the regional banks. It looks crappy. This is a crappy chart. So, but tech, and it's fueled by AI, tech looks great. So buy what's working, right? If the charts are telling, I go by what the charts are saying overall. I'll look at the news to kind of like see why I got this move, but then I come back to the charts. So that's that. Depending on what we get tomorrow, I may or may not do another video. This video and these price targets should hold you all for a while, at least for another week or so. But I will come on if I see something tomorrow and I hit you with another update. With that, guys, I'm gonna be out. Don't forget to hit the like button. Comment on something that you seen, like you want me to see me to go in depth on. Like when I see somebody be like, hey, could you talk about this some more? I'll go in and I'll do another video on it. Right. With that, guys, I'm out. Peace.